The US Financial Supervisory Authority is broadening the crypto monitoring they conduct. Despite the fact that the crypto market is far more mature than USD 2 years ago, there is still a need for clearer rules and better monitoring. The US Financial Services Authority (SEC) is now addressing this by expanding the unit that has the task of monitoring crypto companies. According to the announcement, the SEC's cyber unit, which includes the crypto assets and cyber team, will hire 20 new people. The SEC writes in the announcement that the 20 appointments will consist of investigation lawyers, court lawyers, and fraud analysts. Chairman Gary Gensler said the hiring was on time and crucial to overseeing one of Wall Street's newest and most popular sectors. The expansion is encouraging news for many who have been concerned about the potential for market manipulation and other fraudulent methods in the crypto industry. The SEC Commissioner, Gensler, recently expressed the view that doubling the size of the SEC would allow for a more robust operation. They would be able to fight crypto-based crimes and cybersecurity threats while continuing to identify their own problems. TerraUSD is in bad shape and Terra Luna is going through a tough time. TerraUSD has lost its own exchange rate with the US dollar. There isn't any stabilization inside. This has caused panic to spread among other coins in the Terra ecosystem. At the time of writing, Terra Luna has had a 99% price drop in the last 24 hours, giving Luna a market value of USD around $7 million at the moment. We have witnessed a complete collapse of Luna and USD. Market psychology will probably be of little help in new rescue attempts for USD and Luna. Investors are fleeing USD as they are fleeing Luna. Even investors who are not directly affected are seriously concerned, whether justified or not, of what other chain reactions such as TerraUSD and Terra's crash could trigger. It's a dark moment in crypto history. Will Polkadot's price reverse course now that cross-chain messaging is live? Polkadot, a blockchain network, has now launched cross-chain messaging. The development of the Polkadot ecosystem has progressed over the past year and a half, and this now pays off as parachain auctions end and the first blockchains go live on the main network. The next step in interoperability is about to take shape as cross-chain functionality has USD being introduced. This will allow you to transfer coins across blockchains, for example from Ethereum to Waves. Vitalik Buterin, co-founder, said the Layer 2 transaction fee to be at least 5 cents. Last week, Bankless podcast host Sean Adams tweeted a picture of the average transaction fees for various Layer 2 protocols on Ethereum and wrote, "This is Ethereum, and it's not expensive." The tweet captured the transaction costs on Medi's network, Loopring and Xsync, among others. It's 2 cents per ETH transaction on Medi's network, 12 cents on Loopring, and 19 cents on Xsync. Vitalik thinks these prices are too high. Not only because they're really low, but also because they're still too expensive. He responded to Ryan's statement on Twitter and wrote, "Needs to get under 5 cents to be truly acceptable in my opinion. But we're definitely making great progress, and even proto-dank harding may be enough to get us there for a while." The highest inflow of BTC to stock exchanges in 3 months. The price of Bitcoin has fallen, wiping out all the profits made since January. It's not clear who is behind this, but data from Glassnode indicates that Bitcoin whales are partly to blame. According to Glassnode, the number of whales wallets with over 1,000 BTC has dropped drastically in recent weeks, has resulted in the inflow of BTC to various US exchanges being at its highest since February, with more than 1.7 million BTC. According to Cointelegraph, a high influx of BTC is happening. This indicates that whales are leaving the market as a way to prepare for a longer Bitcoin market downturn. One thing is certain, the recent decline has led to panic in the market, and the Bitcoin fear and greed index has dropped to 11 extreme fear. Solana is down again. Too bad. Last weekend, the stage was set for the NFT launch on the Solana network. A minting tool called Candy Machine has been built on the network, which speeds up the process of minting an NFT. This weekend, this tool was hit with a load of bots looking to mine crypto collectibles. It saw 4 million transactions per second, or 100 gigabytes of data per second. This led to the network suffering a 7-hour network break before it was functional again on Sunday morning at 5 o'clock. The company behind Candy Machine, Metaplex, confirmed in a tweet that the traffic from bots on their application was the reason for the network break.